Alright, what is going on, everybody? Hope you guys are having the best day of your entire life. In this quick little video, I'm gonna break down how I made $10,211. Yes, $10,211 from just 1 hour or 1.5 hours of trading. Now, this video is gonna be quick because I have a meeting and I really quickly just wanna smash this video so you can actually enjoy the sauce. So this video is not gonna be my normal videos, which goes for like 30-40 minutes. This video is gonna be like quick. All right, so when I say quick, you will know the timing underneath. I don't know. All right, so stick with it. If you stay till the end, you will know the strategies that I used, and I love giving our sauce to you guys so you guys can actually start making the money as well and start looking after the family. So let's get to it. I took about 4 or 5 trades, but 3 trades were the trades that actually made me money. Other 2 were like kind of a little bit not very bad, but not greatest trade. So I'll talk about the 3 trades that made me money because I was journaling those trades before. All right, let's get to it. So first trade that I took was on Amazon. All right, so what I did was, this is the market's about to open. I want you to see, right? I want you to pay attention to why would I trade Amazon. All right, now I don't know if this is the first time you're watching the videos. I just want to quickly break down the time frames that I use for trading. All right, so a lot of people just use one time frame for the whole day. I don't use one time frame for the whole day. I use 2-minute chart for first 30 minutes of the market open. That means Eastern time 9:30 to 10 o'clock. I use 2-minute chart AM. Okay. Then I use 5-minute chart for next 60 minutes, which is 10 a.m. to 11 a.m. All right. After that, I use 10-minute chart. Okay, for the rest of the day. So this is very, very important. I use like smaller time frames for when there's not enough candles in the market, and then I use bigger time frames when there's plenty of candles already on the day, because I'm a day trader. I care about from the moment the market opens to the moment the market closes. You see what I'm saying? So as we have less candles, I'm watching smaller time frame. As more candles, I'm watching a little bit bigger. And as there's so many candles now, then I watch 10-minute chart. Okay, that's how I trade pretty much. All right, let's get to why I took Amazon in the first place. Now I want you to pay attention to which one is trendy stock. So I like to only trade the names that are trendy. All right, so only trendy names. That's it, nothing else. So, but I will show you now. Why do you think Amazon? I picked Amazon over everything else. Okay, so there's Apple, AMD, Meta, SPY, QQQs, and Amazon. All right. As soon as the market opened, everything started moving down, right? Or moving up or moving down, whatever. So right now, you can see the markets moving, but can you tell that there's any trend? Like, yeah, you can say that, oh yeah, bro, there's a trend, but it's too early to say that it's a trend. It's maybe just a one quick move, right? So usually wait for like a couple minutes. All right, now look around. Which one has a clean trend? Apple has a clean trend. It goes down and then it bounced. No. What about AMD? Is pushing up? Yes. What about Meta? It went down, pulled up? No. What about QQQs? Went down, kind of holding? Yeah, still. But there's 200 moving average there, so that's why I'm like, no, because again, 200 simple moving average. I'll show you the settings of this. The settings of this is this, so you can take a screenshot, and how to add this, I'm sure you'll figure it out. 200 simple moving average. And to add this is, you go to this indicator, you search MA, and then you go to the settings and change these settings to this. Okay. Now there's 200 moving average there. When there's 200 moving average, I mean the prices can bounce off it. So I was not watching this. Right here, 200 moving average on the bottom. So I'm like, nah, I don't want to trade this. Now what do I have? I have AMD and Amazon left. Just 2 names. Okay. So now we can get rid of all these for a minute. All right, just these 2 left. Sweet. So let's see. This is why Amazon, because we broke below the 200 moving average and we broke below the critical level that I had on the charts. Everything else is kind of either sitting on the critical level or bouncing off the critical level. You see what I'm saying? So it's the only name that is, or actually AMD is pushing as well. Right. So these are the only 2 names. Now I want to see a pullback. I'm a sort of trader who likes to wait for a pullback. Right, now made a move, now give me a little pullback first so I can enter, right? And Amazon looks like it already started giving me a pullback. I'm on a 2-minute chart, and then I saw this little little contained kind of candle, the candle that is contained within the previous candle. I like those candles, right? Now what happened? Check out. Is this nice? I mean, it bounced off. It can be decent, but I was only watching two names, AMD and Amazon. AMD, is this contained? Giving me entry? No. Why? Because it's not contained. It broke out of the previous candle. Everything else, I'm not watching. I'm only watching Amazon now, right? So now Amazon contained? Yes. Where's the entry? Now let's have a look. Now I was watching Amazon. I'm like, okay, this looks good. Where's the end? Where's the stop loss? Can just go on the other side of the levels. Profit targets here. Sorry, this is the entry. Profit targets here. All right, simple. Now think about it. Just visually, you can see this is the risk. This is the reward that I'm looking at. Does it make sense? Yes. What was the reason for the entry? I looked around. What was happening on everything else? And this was the only name that I saw that looked high quality setup. Right. So the moment this breaks towards the downside right here, the moment this breaks, I'm going to jump in puts. Right. Let's see what happens on next candle. It broke. The moment it broke, I jumped in. Now my stop loss, where's my stop loss? Stop loss on the other side of this candle, right? So I'm like, sweet, let's see what happens. Bam. We dropped. Before it hit my stop loss, we dropped. Dropped heavy. Bam. All the way down. So I'm like, oh my God, this is looking interesting. Right? Now I'm in the trade. Now here's another lesson that you should learn from this is a lot of people exit because they get scared when the price is closer to their stop loss. Bro, take it easy, step back. Breathe. It's okay. Yo, it's okay. There's a stop loss there for a reason. We didn't just like this number, that's why the stop loss is there. No, the stop loss is there because of a system. All right, we didn't just go like how newbies do. You know what newbies do when someone who's starting out, newbies go, oh, I like this number, let me put a stop loss here. No, we have a system behind. So why are you stressed out? So we're chilling. You see what I'm saying? So now, what's happening? I'm in the trade. Everything looking good. It's entered. Everything looking good. I am up. And now, if it start giving me another entry, would you take it? Now, is this candle contained? Yes. So if it breaks again, would you enter? Why wouldn't you add to your winners? People add to your losers. But people lose. Most of the people add to their losers. But most of the people lose in day trading. So you got to do exactly opposite. You got to add to your winners. So now this trade is already a winner, right? Already started making money. So now, am I going to add the moment it breaks below this? Yes, right? 100% I'm going to add the moment it breaks below this. Why? Because I want to bet on my winner, right? And then what happened? We pushed up. Am I in the trade yet? No. Why not? Because now I'm watching this level. Does that make sense? Now, let's see. Am I in the trade yet? No. Why? Because it never broke my level. So now I'm watching this because this is contained. Right? Now, where am I jumping in? The moment it breaks below this particular critical level. It's that simple. And also, it's a kind of a flag. Think about it. It's such a beautiful flag forming. Right? Does it make sense? Look at this. Wow. So nice. Right? The moment it breaks below this, I'm going to add. I'm going to add to my winner. I'm already winning. Right? So now, let's have a look. What happened? Yeah. Bam. It hit my first profit target right here. 192.2. Hit my first profit target. What did I do? So let's say if I jumped in, say 20 contracts and I added another 10 contracts. So now I have 30 contracts in total. I'm going to jump out of 15. The moment it hits my first profit target on the full position, I'm going to jump out of my 15 contract. No stress. I'll jump out. Easy. Right? That's how I trade. Now, where's the stop loss? Let's say these 30 contracts, I jumped in at $100 each. So that's, $3,000 position size, whatever. For these 15, by the time I got out, these were 130 each. That means $30 times 150. That's $450 a contract. Not bad at all, right? Now, I still have the 15 contracts that are still running. Now, where's the stop loss for those 15 contracts? It's the break-even price. If here stock bounces, it hits my break-even price on the option contracts, I'm going to jump out. So what am I risking on this? I already banked $450. I mean, if it bounced, what am I risking? Nothing. Why? Already banked, already took money. People look at unrealized gains, bro. Unrealized, yeah. For the other 15 contracts, I'm still up 450, right? Because for the unrealized, people look at unrealized profits and they get attached to it. You don't want to get attached to it, right? I'm like, man, I don't care, right? It started bouncing a little bit, sweet. At that time, I started trading, I think, something else as well. So I was not like super paying attention to this. Um, if you see me looking down, I'm actually looking at my trading journal. I added again. I added again on the next candle a little size. So basically, what I did here was the 15 contracts that I jumped out of here. I added those 15 again because this candle was contained. The trend is already weak. This candle's contained. So I was like, all right, you know what? Let me add another 15 here and make it my whole position now. 15 before that was holding, I added 15. So now the moment it breaks below this, did I take profit? No. Why? Why didn't I take profits? That's a question. Why didn't I take profits? The reason why I didn't take profits is super freaking simple. The reason why I didn't take profits was because I was kind of paying attention to this one critical concept of once we have already bounced on a critical level, right? The moment it breaks below that critical level again, a lot of stop losses are gonna get triggered. What I mean by that is you gotta understand like psychology. Okay, now this is a little bit deep, so you really want to pay attention to this. You gotta understand psychology. What psychology? The people who buy shares, and they go long on shares, that means people who buy shares. I'm sure you have heard so many news about, oh my god, Bitcoin's crashing. Oh my god, shares are crashing. But if everything is crashing, why are people not making enough money about from playing puts or by shorting the stocks? Because people are biased. They don't even know that you can make money when the market's going down, right? So when most of the people are like that, they don't like to do the shortings. They only want to go long. So when they see a critical level bounce like this, they're like, oh my god, this is good. Let me go long here. My stop loss would be just 2 cents below this or 3 cents below this. So they are suckers for risk management. That means they're buying 1,000 shares, but their risk is like 10 cents. So they're literally doing this. So they're risking nothing, almost no money. 10,000 shares, they're risking almost no money, and they have unlimited. Like they have so much capital to do this, but they don't want to take a big risk. So 10 cents is the risk where they bounced, and now where's the stop loss? Right below. Now when somebody who buys, right? Let's say you bought an iPhone and you try to sell your iPhone, and you try to sell in the market. You go to the market, you try to sell. Now your order, just to get rid of your position, is going as a sell order, right? Into the market, it's going as a sell order. Think about it. So every time that a buyer tries to get out of a stock, it's a sell order. That means the moment his stop loss get triggered, it's a sell order. So I know for a fact the moment it breaks below these stop losses, this concept is called second break. Okay, this is the first bounce. The second time it tries to break this level, oh my god, if it breaks, it's gonna go down really quick. That's a concept behind this, right? Called second break. Sweet. Because all these suckers who bought long shares thinking that it can keep on going, they are getting caught in this, right? And also the people who want to short after the critical level break, they're jumping in. People who are stop losses are getting triggered. Their sell orders coming in. So there's so much selling pressure, and we are already in the trade. You see what I'm saying? Now, bro, what happened here? Is it giving me another entry? Is it going like, hey, it's contained again? I mean, if you want to go short again, maybe it's not a bad option again for you to go short. But I was like, nah. I'm already up. I'm up decent money. I already took some profits off, then I added more. I'm already up again. And I was trading something else. I was not even paying attention to this. And I'm like chilling, no stress. And now next candle is about to be 10 o'clock. So the moment 10 o'clock is about to hit, what am I doing? I'm jumping on the 5-minute chart. I'm not even worried about 2-minute chart after that. I'm jumping on 5 minute chart, and on 5 minute chart, I'm chilling, no stress, nothing to worry about. Why? Because already took some profits. My position size is decent. I've taken some off. Made some money already. I'm still sitting in the trade, and I'm gonna just let it ride. Don't stress. Don't worry about this too much. That's my whole concept about trading. And then it started going down again. It played around this critical level for a minute, but what happened? It went down. It went down. Right, hit my next
It's
level.
4 o'clock.
The moment I hit my next level, what am I doing? So I have 30 contracts. The moment I hit my next level, this is the bet that I was taking to break below this. I have 30 contracts. I'm taking another 15 off. Right? Just 15 off. Half off, let's say. This is just hypothetical number, all right? This is not my actual position size. This is just hypothetical number. I'm taking 15 off again. I have another 15 to run. Right? And now, this is the one thing that I did wrong. I saw this candle that was contained and I didn't add. I was not paying attention to it that much. This was another contained candle. I could have added, could have made money. Because next candles we dropped like this. But I caught this whole drop with my remainder of the position that I was still with the remainder of the position that I was still holding. I caught this whole move. And when this happened, I was like, oh my god, this was like a big move. I believe this was like I think it was like one stage, was it like 150, 160 and 100 something percent rate or 170% rate. It was a big move, 150% rate. It was a big move, right? I think it was 150. I don't look at my P&L when I'm actually trading, so I think it was a big move. It was like definitely over 150%. But it was a big move. Look at this. Bam, all the way. Yo, we entered roughly somewhere here. Think about it. This is nice moves, right? Especially on a Thursday when the options are paying. This is good. Now, this is Amazon. Next one is QQQs. I'll just quickly go over the QQQs trade as well with you. And similar concept. I'll show you why I was even watching QQQs. Check this out. This is, yeah, you know what? Let me just put Amazon here. So you know. Check this out. Everything else, I'm already in Amazon. Everything else to me, just like the bounce here that we saw on Apple, looked ugly. AMD just looks choppy. Meta looks choppy. SPY looks choppy at this stage. I was actually in SPY a little bit. I was playing SPY at that stage. There was a trade. I'm already in Amazon, so that's good. This looked pretty good because it's weak. The candle's contained now. And I'm like, okay, the candle's contained. Sweet. I'm gonna buy puts the moment this low breaks. The next candle never actually broke so I'm like, no stress. I'm still waiting. I'm still watching this lows. No stress. Let me see. Where's the stop loss on the other side? No stress. Easy. And is it still breaking? No. I'm like, no stress. No problem. This is kind of forming a little flag now, which is like, you know, because let's say if there's a lot of buyers sitting around this level. Let's say, for example, if you're thinking like, oh, there's so many buyers sitting at this level. Yeah, think of it like a freshly frozen lake. If you bounce on a freshly frozen lake over and over again, there's going to be a chance where you're going to be just dropping below. And that's what's pretty much I was like betting at. I'm like, okay, let me go short this. Stop loss can be on the other side of this little range. Entry right here. And profit target probably at the bottom. Right, or profit target originally that I thought was like this, and then 200 moving average on a 5-minute chart. So what am I risking? I'm risking this much for potentially this big reward. Is it worth it? Definitely, right? And this is the trade that I played with some right size. I'm like, oh, this looks really good, right? And then it went. Right, it started playing around this wick. Oh my god, this wick was like, it killed the premiums. It really killed the premiums. But I was like, no stress. You know, my stop loss. I know where my stop loss is. Why am I scared? Why am I scared? Right? Actually added a little bit more here. Yeah, actually added a little bit more here. The moment this containment candle broke right here, I added more. I was like, oh, let's see. This looks good. And bam. The moment it did this, what I did, so let's say if I had 10 contracts here, 20, I exited 10. I'm holding another 10 that I'm going to exit the moment it hits the 200 moving average, right? Because I'm going to exit the whole position. Boom, hit the 200 moving average. I jumped out. I actually didn't jump out fully. As soon as it started going down a little bit more, I'm like, sweet. And when it started bouncing off this, Like, look at this. When it started bouncing off a little bit, I'm like, oh, 200 is getting respected. Let me get out fully. So that was the time where I was like, you know what, man? It's not just worth it. Let me just get out fully. So that's the point where I'm like, it's just beautiful. It's just beautiful. Beautiful. Bro, I'm happy, man. I'm happy. I'm chilling. So there was a trade, man. SPY, QQQs. And another one was SPY, but that was pretty much my trading. I'm sure you get value out of this. By the way, if you really enjoy these videos, man, you gotta let me know in the comments, because I see it's not very motivational when I see like there's 2 comments under the video. So comment under the video, man, if you enjoyed the sauce. What's gonna, because some people, I'm sure some people like you guys may be like me, who just watch the Instagram reels and never like any reel, or watch YouTube videos, never actually like a video. Bro, it really helps the channel. That's all I'm saying. Nobody's gonna know. Nobody's gonna know that you like the video. So like the video, subscribe, and comment under the video. Alright, I gotta jump to a meeting, so I'm gonna send this video to my editor to make some changes or whatever, and then I'll post. Alright, peace. Look after yourself. I'll see you later. Alright, goodbye. Let's freaking go!